the mystique around Michael Saylor. This is not just fluff. I mean, he's got a track record. He's sharp, and there is a strategy behind this. In addition to that, there is an aura around him and a perception that he's a winner. So anytime someone has that and a legitimate strategy backing them up, it's going to give them a little extra push, a little gust from the gods, as it were.
Yeah. And Mark, what's your view?
The thing that I think is interesting is if we look at the way that he's financing those purchases, he's doing a lot of it through these callable bond issuances. And he's able to do that at a 0% coupon. And the reason is, if you look at the mechanics of those callable bonds, what's happening is he's issuing debt, he's paying a 0% coupon, and he's also short a call option on the MicroStrategy stock. So if you're a buyer of the bond and MicroStrategy stock trades at some premium or discount to the underlying, if you believe that Bitcoin's going to go up long term as a bond buyer, you can basically buy these things to get essentially a pretty cheap call option on MicroStrategy, which I think that's kind of helping the feedback loop a little bit that he's getting, because he issues more of these bonds, buys more Bitcoin, price goes up. All of a sudden, the delta on these call options might not look so crazy if the stock's moving a certain way, and then he can issue more bonds and continue the cycle. Now, at some point, this breaks down. When Bitcoin goes down and a bunch of these options expire out of the money, people are going to go, maybe I don't want to buy debt, at 0% here. But for now, as long as this bull run continues, I think that will probably hold.
Yeah. And Gabe, are you going to get involved in this?
Like you said, Ken, it's a financial engineering marvel as far as the way you can get to the capital markets and basically get the money for free to purchase more Bitcoin, right?
Yeah.
And
perpetual motion machine, as they say.
Option, yeah. And that's where that math works. So Nello, you said as well, there's that human aspect of it, him as a person, his aura. I think it feeds more euphoria into the price, allows for the premium. But just like anything else, when euphoria gets priced in, if the price action on Bitcoin starts to trend sideways, I'd probably expect that premium to start to evaporate. So
yeah, I mean, and as you described, this is quite an engineering feat. And then anytime you can get capital for zero, take it.
So, absolutely, yeah.
That is quite the coup. So love that.
You're listening to CFB Talks Digital Assets, the home of informed conversation about crypto for institutions building the future of finance, presented by CF Benchmarks. Hey everybody, thank you very much for joining us for another episode of CFB Talks Digital Assets. I'm Ken O'Deleger, Head of Content, and I'm joined as usual by my colleagues, Gabe Selby, who's Head of Research, and Mark Pilipchuk, who's a Research Analyst. Today, we also have a full house because we are joined by our friends and colleagues at FalconX, the prime brokerage with a focus on digital assets. We are joined by David Lawant, who's Head of Research, and also Nello Cafcules, who is ETF Business Development Manager at FalconX. So huge welcome to both of you guys.
Great to be here.
Thanks for having us, folks. I'm excited for the chat.
Of course. And why are we here? Well, are you kidding? Number one, look at the price of Bitcoin. In the last few weeks, it's been flirting with the 100K level. Obviously, it's pulled back as we're recording, but not really that far, not to any significant degree. Additionally, of course, this has been a banner year for crypto. I don't think anyone's going to disagree with that. We have a sort of like an embarrassment of riches in terms of exchange-traded crypto-related products, related to spot products. And of course, in the last few weeks, very recently, these have been followed up by some of the first options, exchange-traded options on the Bitcoin and Ether ETFs. I think just the Bitcoin ETFs to begin with. So this is unprecedented territory relative to where we were last year or even 6 months ago. Additionally, of course, we now have coming up to 11 months of price history and filing history for the existing Bitcoin ETFs. And we've got a sizable amount of, filing history for some of the Ether ETFs too. So we can now come to some sort of informed conclusions about who's buying, motivations for buying, and of course, some of the sort of like patterns underlying the flows. We're replete with basically the major experts in the field for that subject matter. So let's get the show on the road.
Let's maybe talk about this incredible reception that the market gave for exchange listed options on these ETFs. And IBIT saw, I think, 1.9 billion in notional volume on the first day. My friends and colleagues were discussing before the show, how do we benchmark that? I'm not sure if you two have any historical watermarks that you can point to, or is this just completely new territory for how much activity you saw on the first day of trading these derivatives?
The launch of IBIT options, I think, was surprising even for option experts in the space. I would say very few folks, if any, were expecting this amount of activity that we actually saw. And this is coming from a high bar because there's been a lot of excitement around these ETF options building over the past few months. I can make a quick parenthesis here, but there is a very large chunk of the market that today just cannot, that until the launch of IBIT options just couldn't access this market. So before IBIT options, the crypto options market was basically spread between Deribit and some of these offshore exchanges, which at least in theory are not accessible to US users. And then you have the CME or bilateral OTC options, which are usually accessible to a larger, more professional or bigger institutional crowd. That's the space we play in. But there's this massive US based, not perhaps large institution base that just didn't have access to options, and IBIT options kind of provided just that. So there was a lot of excitement around it, but I think even given this level of excitement we saw, I think it was a pretty good surprise. I think to give you a sense, and I'm kind of taking this from top of my head, might not be entirely precise, but we're probably talking about something like 50 to 60% of the Deribit volume. And Deribit is the leading options exchange in the market. I think in terms of open interest, Deribit is probably 80-ish, if not more percent of the total crypto options activity. So this was actually a pretty hefty and a very promising beginning.
With the launch of these options, do we see a continuation, or what was kind of it being framed as like a degen, kind of very, people in the market just trying to do zero days, zero expiry, those types of strategies? Or do we get this type of unlock where you get to see new kind of, I would say, like utility type option strategies that actually will either hedge a portfolio, create certain types of outcomes, defined outcomes? Maybe you limit some of your upside, maybe you limit some of your downside. Where do you see, where do you see this going?
I definitely think it's the latter. As David mentioned, this was a story of accessibility. We had, when you compare this to other launches, I think the only thing, obviously it's slightly different, but the only thing you can compare the Bitcoin ETFs to, and any product derivative of them, is to themselves. Like, they are in a class by themselves as far as reception. And then when you look at it and you look at what happened, as David mentioned, it is about accessibility. Previously people were blocked. Either you had to be a very large institution or you were geofenced out of certain components of the market. And here you have the ability to come in and step in, express different strategies. And I think we're going to see much more of that coming down the pipe. Obviously, there will be the degen element as well, but there's going to be much more accessibility for expressing other types of more traditional strategies in this space now.
If you're in the shoes of one of your clients, so this is going to be, it could be an issuer, it could be a market maker, it could be an allocator, it could be any one in between, it could be some other sort of large scale party. But what is it about the unlock that we've seen? There's an evident unlock, this evident pent up demand, what is it that was unlocked? What is it that now people are able to do? And when I say people, I mean really institutions or institutional participants. What is it that they're able to do now that they weren't able to do clearly before this? I mean, apart from obviously the obvious answer is yes, they can buy options, they can sell options. But what is the sort of facility that was unlocked that is clearly a facility that people were dying to actually get their hands on?
Previously, with no options available to them, there were no strategies available necessarily on these products. Like, you could do bespoke things with OTC Desk. You could go and try and figure out more creative solutions. But for this opens it up to the masses. This gives people the ability to access the market in a real way. So literally, any kind of traditional overlay, any kind of strategy you could think of before is now expressible. I think this is a key component. There are so many things from the traditional markets that have yet to be transported over to the crypto native world. And you will see a lot of mirroring of certain types of products and certain types of strategies. Ultimately, that's the low hanging fruit of this market. And that's what gets people very excited because it's something they're already familiar with, especially large traditional players. They're able to take a look at this, or maybe not so large players. They're able to say, oh, wow, this is something I'm familiar with. I can start now to interact with this market that maybe before I was unable to, or at least not to the fullest expression of what I wanted to do.
Yeah, one thing that I've kind of noticed, and I'd be curious to get your guys' thoughts on, is we saw IBIT launch first, and we saw it take 1.9 billion in volume on the first day. Subsequently, we had all of the other issuers options launch on those ETFs. What we're seeing is like 99% of the volume is concentrated on IBIT. I mean, I thought it was going to be high, maybe something like 90%, because IBIT is the most liquid of all of the ETFs, but 99% seems like there might be some opportunities to play across the ball surfaces there. What do you guys think?
That's a very interesting stat, Mark. And your point on all these different ball surfaces, I think, is a very valid one. Perhaps even before we start getting there, I think it's also important to understand that not all of these options, they work exactly the same way. So if you have, like, for example, bilateral OTC options, they're typically different from listed options in the sense that they allow you like broader flexibility of parameters that you can play with. Like when you go into the listed option space, it's a little bit more of a one size fits all type of framework you are operating in. And then the other important thing is that OTC options, they also allow you 24/7 trading, as like a lot of these trading desks, they operate on a 24/7 basis. So there are certain fundamental differences across these, let's call them option classes. Let's say you have like the derivative type options, you have CME options, you have bilateral options, and now you have OTC options. So just here, before getting into the different issuers, I think there's probably a lot of room for market makers, arbitrageurs to kind of play around. There are some interesting things though. Like one thing, and if I'm not mistaken, this hasn't changed. Deribit, for example, which is the most liquid option value, goes 1 year forward. So like with IBIT options, I think you can go like 2 years forward. So you get a little bit more visibility if you're looking to kind of long-term implied vol type of signals. So they're not necessarily the same. There are differences here. But I do think that there's probably and I'm sure that the more sophisticated options traders and market makers will find tons of ways to kind of play one market with another. The final thing I want to highlight is there's also a question about ETF options being more like securities, while some of these others are not. So there's also kind of a licensing regulatory type of environment. But yeah, I mean, this is just to add on top of what you just said, Mark. I think there's going to be a lot of opportunity for like cross arbitraging, not only across the issuers, but also across these other option types, I would say.
We had a note in here about talking about the skew, and I'd love to hear what you guys think about the general direction as much as we know, about it at this point.
Yeah, so I actually did look at the options, the vol skew a little bit just before this, and it's actually picked up on the long end. So the 10 delta long dated calls, we're seeing more implied vol than we did on launch. And it actually, to me, that kind of makes sense given the price action and kind of the return distribution that Bitcoin has. If I'm a trader and I'm buying long dated calls and I know this thing can rip 300% in a year, I mean, the payoff on that for a relatively small amount of premium is pretty good. It becomes a pretty attractive trade. But like the thing that I'm interested to see going forward is we're going to start to see maybe some more of these structured products and structured type ETFs. How are people going to harness that volatility skew? I don't know. Do you think we could be selling calls like on the NASDAQ? There's that Q yield ETF where you can get 10% and they're selling calls. What types of yields might we see on Bitcoin? Or we can sell really long dated calls and buy puts that aren't so out of the money with that premium because of the skew, and we can preserve that asymmetric return distribution with downside protection.
Absolutely. You're going to see all of the above. You're going to see in the actively managed ETP wrapper, you're going to see enhanced yield. You're going to see downside protected, so buffered. You're going to see everything now start to open up as a result of this. And as more options come online, as more products come online, it's only going to increase the universe of what can be built into that actively managed wrapper.
Fully agree with that. The one thing I would say, and this is just my perception, I do feel like the first knee-jerk options buyer might be the person who's trying to capture long upside kind of top side structures, buying these long dated out of the money options. But once these the market structure starts to become a little bit more clear, then you kind of bring other players who are looking into different things, like these more sophisticated strategies, as Mark and Nello mentioned. Just perhaps for comparison, if we look at like the derivative market, most of the open interest is on the year end expiry, then the month end, and then the quarter end. And here you have like probably 70% of the total Bitcoin open interest. It does feel like, from what you're saying, Mark, that it might be a little different on the IBIT side. Like folks are looking more for like this tail upside type of calls. And I think it makes sense. I mean, the beauty about options is that it allows you to express all these different views. And then over time, I think more market participants can come in and express their views, and that's how we start to see the structure forming.
So far, I think what we've seen is a relative, like an overwhelming demand for calls versus puts on IBIT or on these Bitcoin ETFs. If you look at that, kind of what's the distribution look like? And so it does kind of give you kind of a little bit of perspective that people are really interested in kind of the upside potential of Bitcoin. They're not so much interested on the hedging side yet. If you get a different market structure, if you see price, start to chop or even go down a little bit, it'd be interesting to see if we do see more activity on the put side. And I'm sure this is something that you all at FalconX have studied quite a bit. So I'd be interested to get your take. But do you think that there's opportunity to create, these, like, do you think there's going to be appetite for more of like a demand type structure of a hedging type vehicle in something like that versus just trying to capture the longer tail of the distribution, the upside potential?
It's a great question. Perhaps we can use the kind of derivative market again for reference as a more mature and perhaps more, if not institutional, at least like pro crypto trader type of environment. And I don't know the numbers by volume, but by open interest, if you look at derivative, something around 70% of the open interest there is on call options. So like, and honestly, I actually have these numbers in front of me. I'm looking at them. They haven't changed much, honestly. Over the past 5 years, they've ranged between 50 at the very bottom to 75% at the top. And they've been in this range for a long time. And most of the time, they've been on the upper side of that range. So like I do feel like Bitcoin, like crypto people were naturally geared to these more like kind of topside structures. But, and I haven't seen the latest IBIT numbers, but I do feel like these are lower numbers than what you're seeing on ETF options right now. So perhaps that could be used as a reference point of where we could get in a relatively shorter term if the profile tends to match what we see a little bit more on their bit.
And just for quick comparison, when you compare like the options on Bitcoin to, let's just say, SPY or a US large cap ETF, typically you typically see more implied vol on the put side on the shorter dated tenors, and as you go further out, you see cheaper options. They're more affordable. But this is kind of like the opposite in some regards. It's kind of like the complete inverse on Bitcoin, which is just like it's so cool to see. It goes to say that like I think it has a lot to do with the asymmetrical return profile, and that's what the market's trying to adjust for. But yeah, it's gonna be interesting to see the new audiences that could be coming into the market. How ultimately will that impact implied vol in the future? It's TBD, but it's going to be very exciting to see. But maybe we can shift our focus, change gears a little bit, and talk about the 13Fs. We had some 13F data that came out. Nello, I know that you're the ETF guru there at FalconX. Were there any names that surprised you on the, that really stood out as far as new owners of spot Bitcoin?
Not really, honestly. I was not shocked by any of the names. I think you know, this was always meant to be an access vehicle, and it has done exactly as billed. It's given the access to everyone we expected to step in. The institutional players, we no one that shocked me, honestly. David, how about you?
Yeah, I think for me also not a big surprise. I think it's interesting to continue to see kind of adoption growing. And honestly, I almost feel like the real interesting batch of 13 apps will be the 4Q1, because we had like Q1, we had like not even the entire quarter. Q2 and Q3 were honestly sideways markets, even down markets, depending on the reference point you're in. I feel like now in Q4 is when you had like this really big market unlock from the trend we've been in from the range we've been in, I must say. And of course the election outcome. And we're seeing like these ETF volumes, I mean, go absolutely to the roof. So I am very much looking forward to the Q4 batch. And I think the Q2 and Q3, I think they show some moderate improvement. I'd love to hear you guys, and I know you follow these very closely, granular at the individual name level to some point.
Yeah, David, I agree with that. You add a dash of FOMO, and then you also add the uncertainty of this election, which was a massive
Yes.
overhang. You take that
Yeah.
out of the equation, throw in a very favorable to crypto administration. I am
Yeah.
very curious to see who steps in. And through the ETF wrapper,
Yeah.
that'll be very interesting to see if new players stepped in. But obviously, other players doubled down. But I'd love to see who stepped in this quarter now that there's a clearer framework moving forward.
Yeah, I mean, just a bit of color on that. And this was pre-election. My understanding was pre-election. I happened to catch the Goldman Sachs allocation from its filing, and it was something like 83% higher on the prior quarter in IBIT, in fact, which I just thought was stonking, right? Clearly, I don't know. I mean, I'm not aware of the absolute number, but I think it was impressive. It was certainly sizable. So, and that was, I believe, before before the election outcome. So that is a bit of color for that type of potential allocator. But what I would ask, all of you actually, maybe starting with Nello, is, are you starting to get a sense of the entrance of the type of allocators that we expect to see in this space in a year's time, or in 8 months' time, or something like that, of what the type of allocators that we want to see. Obviously, real money, large funds, could be pensions, it could be, that of that nature. Are we starting to get a sense of that from the patterns that you're seeing in these filings yet?
I would say yes. I would say obviously the pension funds, endowments, we're still a little bit away from that. But at the end of the day, this framework that will be introduced in this new administration is going to really pave the way. I'm very bullish on that coming in the next year, potentially seeing a bigger swing into the markets by those very large institutions. And again, you know, a 1% allocation by them into this market, it's just so massive that it would be hard to see it not move the market in a significant way. So I think yes, this administration, all the things we've discussed already, are pointing towards those very large allocators stepping in. Also, you're going to see other things like we discussed previously. You have TAMPS, the turnkey asset management providers. They provide a lot of the framework for smaller RIAs, but in aggregate, you're talking about $98 billion plus, worth almost $100 billion plus of capital that sits with these TAMPs. So they provide the operational backbone and a lot of the logistics support for RAs. Some of them were blocking certain players from stepping in. Obviously, they have to be very mindful of allowing people to turn on into the crypto market. They don't want to get sued. They want to make sure that everything's operating very well. I think with some regulatory clarity, you're going to see them stepping in a major way, unlocking the gates to the RIA community and the retail flow that we've been waiting for in a more meaningful way.
Yeah, and again, to that point, we've heard news in recent weeks of Morgan Stanley stating that all of the Bitcoin ETFs are on the approved list for their advisors, and we know that Morgan Stanley owns, I think, the biggest standalone wealth management firm of its kind in the States. So clearly that's indicative, and that wealth managers are likely to increase their holdings in the latest round of filings or the upcoming one. Well, what are your additional takes on that? Mark had a note about potential for miners to convert their Bitcoin into ETF shares. And this, obviously this will bring them into the TradFi world a little bit more incrementally. But are you starting to see some signs of that as well? Maybe, I don't know. First of all, Mark, do you want to sort of like give us some color on that?
Yeah, on that, and this kind of goes back into the whole regulatory outlook. The one thing that we've kind of been seeing people start to talk about is the potential for in-kind creations and redemptions for the ETF shares, which could be a big unlock for people that might be holding a lot of Bitcoin to effectively securitize that. Are you guys hearing similar interest or anything around that? And what are your thoughts there?
Absolutely. That's a next logical step for the market, I would think. I think that is critical. If we're going to have a real functioning ETF, that is the hallmark of an ETF, the in-kind create and redeem process. So I believe that will be coming. I can't say when, but I think with a clear regulatory environment, we'll definitely see that. Now, with respect to the miners, this is a way for them to enter into the TradFi world in a meaningful way, but while still maintaining exposure to BTC. So it allows them to step in, have assets, say, at a traditional prime or a traditional brokerage, and then they can actually put that money to work in different ways. So I think it's an incredible unlock for the ETF space, and it provides a nice vehicle through which miners and other traditional crypto players might be able to do this.
It's clearly a thing that a lot of us, I think, understand intuitively, but we don't understand the extent that maybe a large mining firm is maybe not literally locked out of the financial system, but is tacitly, an outsider. It brings a lot of disadvantages. So in practice, what are the concrete advantages? Why do you think this is going to be a major major impetus for a mining firm to actually move in this direction? I believe it will, but I'd love to hear a little bit more detail, from your point of view.
Well, like I said, it brings them from, obviously crypto native miners, they have their fingers in a lot of pies. I mean, energy projects around the world, various other projects that they're involved in. This brings them squarely into a very well understood wrapper, and one that allows them to step into the traditional financial markets in a meaningful way. And it allows them another way to liquidate positions, whether it's, they don't just have to go to the crypto markets. They want to access cash. They sell out of the ETF. They get into their cash position that way. Now, the interesting thing is in Europe and in other places around the world, it might be a little bit easier for them to roll into an ETP. Here, we still have multiple hurdles through which you have to go because of the bifurcation of the creation redemption process. You have the APs on one side, you have the LPs on the other. So we have the cash creation mechanism here in the US for our BTC products. But eventually, if we get to an in-kind creation mechanism, it'll be much easier for them to roll into. Right now, it requires more hurdles.
So it's all about efficiency.
Correct.
Speaking of efficiency, maybe David, we could jump over to the research note that you recently pushed out on Bitcoin's recent run up to 100,000, and it was a really interesting piece. So shout out to that. If you're listening right now, be sure to go to their website. It's a great read. But in one of the kind of I don't want to call it jargon, but it's kind of like it's the liquidity absorption ratio.
Right.
So maybe you can give us some color on what you observed with liquidity dynamics as we saw this recent run up, which didn't quite breach 100,000. I think we were all holding our breath, and we got close, but we didn't quite get there. So let's save that for a future date. But yeah, maybe you can give us a quick breakdown on what you saw as far as liquidity dynamics, the volumes, everything like that, which seemed to be pretty spectacular.
Gabe, we were tantalizingly close.
Yes, I know.
We were,
And I think that's going to be, I think we're going to be near the 100K range for a while. And this is kind of where the piece kind of got to. Perhaps the backstory here is that liquidity trends in crypto, they don't change very often, but when they change, they usually can be pretty helpful to contextualize where you're in the market cycle. They happen like once a year, twice a year at most. And the exciting thing is that we are in one of these stages right now. And of course, that comes from the unlock and kind of price breakout that we saw. But the two main kind of indicators that I look in terms of liquidity is how volumes are looking like, whether on spot or futures market, but usually mostly spot, and also how order books are looking like. And this term, which I honestly kind of invented, which I call the liquidity absorption ratio.
I love it, by the way.
It's great. It's superb. Yeah.
This is the relationship between spot volumes and order books. And the reason why I've been paying attention to this for the past year is that we have been seeing this throughout the cycle. When Bitcoin really takes off, there is kind of an order of magnitude of change across liquidity indicators here, and their relationship is interesting. So just to give you a sense, Bitcoin went from, let's say, 60 to 70K, which is the range we were for many months until the election, for most of the time, to, let's say, now 90K. So we had a nice 50% jump, or slightly less than that, depending on our departure point. But actual volumes went up by 4x or 2 to 4x, depending on the time you look at. So like the Bitcoin spot market was trading $10 to $12 billion on most days throughout 2024 until the election. Right now, we are at 25, 30 billion on a regular day, and 40 to even $50 billion on days where we have like intense activity. So while prices went up, let's say 50%, volumes went up 2 to 4, even 5x. This is usually a very interesting setup for the future market, because one textbook of a fake rally in crypto is when you see higher prices and lower volume. And that's certainly not what we're seeing now. So that's one encouraging sign. And then the other thing that I believe is interesting is that not only you have prices going up, you also have volumes going up by more than that, but the order book is actually getting tighter. So the order book is shrinking on a relative basis to prices. And what this liquidity absorption ratio kind of does is kind of squaring all these things that I just mentioned. So when this ratio is high, it means that there's a high elasticity of like the transfer from news flow to prices is higher than it otherwise would be. So, and this is very typical of kind of the emerging kind of stage of a full-fledged crypto bull market. So this indicator was just a way to put these dynamics that I've been following for actually quite a long time into one simple indicator to follow, and that's what it's basically seeing. And I think that's interesting because it kind of gives you confidence that this rally has room to go. Of course, as we were saying before we started the recording here, we probably need more actual news flow right now, and not only the expectation that things will be different. Now we probably need to start seeing actual things going. But it's very promising for those who are looking into where we are in the market cycle.
You may not be aware of how good which is essentially what it is, your model actually is, David, because it's taken into account everything that's happened, basically this year, everything that you're keeping an eye on, and, come up with a sort of like a categorization of the dynamic that you've actually observed, right? So I think it actually does give us a framework to actually have a little bit more confidence as to when that 100K barrier might actually go. And as you say, it seems to be that, the market is telling us that there is further room on the upside, judging by, most recent data that we've seen. So, yeah, I think, Gabe, I think you had something else to add on what we've just been talking about.
I just wanted to jump back into the kind of the order book dynamics. I thought that was really interesting because what you kind of, I think, deduced is that when you have so much volume and yet the market depth isn't expanding as much as, maybe the volume or the activity that you're seeing or that you're observing, it creates this price elasticity dynamic where we can really see, prices move, I guess, in pretty rapid or violent fashions, which is what we saw up to the run up to 100,000. So I just wanted to follow up and ask, is this something that you've observed in other asset classes or in other markets? This dynamic of, order book depth, increasing volumes, price elasticity, or is this something that's kind of unique to Bitcoin itself? It's something that I'm just curious because I think as someone who's just is a fan of your research, I wish I could just ping you sometimes, and get the answer right away.
That's such a good question. And no, and thank you so much for the kind words. They mean a lot coming from you guys, a team we obviously respect a lot. Man, that's a great question. To be very honest with you, we don't have sometimes good data on traditional markets as you can have easily with crypto. So this analysis is not that easy to carry. But my general impression is that I think it happens kind of across the board. If you think about what the underlying reasons why this is, it kind of makes sense, right? So if you're a market maker and the volatility profile of the asset is changing, you might want to pull back a little bit. So you want to make your spreads a little tighter. So like a lot of these things kind of make sense if you think from what at least I would do if I were a liquidity provider in any market. um, so a lot of that makes sense. Having that said, my impression is that in crypto, the swings are a lot more, they're a lot wider. So I don't think I would be surprised to see broader markets with that dynamic at this magnitude. Perhaps when you have like a breakout stock, it would be interesting to see like maybe Nvidia and how that played out over the past couple of years. Maybe we are seeing certain similar dynamics in some of those type of kind of breakthrough assets.
Right. We got over a month left of this year, which is, we've seen anything can happen in a month, right? I'd love to ask David and Nello, what are you looking at? Clearly, we know, we've got all these holidays coming up. Probably most of the activity in terms of, issuance, regulation has happened already. I don't think anyone's going to be making any major moves, but so I guess it's going to be down to the market to keep us interested. What are you sort of like expecting? What are you looking at? What would you like to see? Anything particular that is a burning issue in your mind you want to sort of air as we go into the closing weeks of the year? David?
Yeah, I can definitely start. I'm looking at two things. The first one is another actually liquidity indicator, which is the skew of the order book. There's also an interesting one. It kind of shows you how much ask orders as a ratio of buy orders you have on the book. And one thing that we're seeing with Bitcoin is that whenever we get near the 100K level, the order book starts to really skew to the sell side. Actually skew to a level that we haven't seen. We've seen it very rarely in Bitcoin's entire history. So what this is telling me is that whenever we get close to that 100K range, the kind of executed orders, buy orders exhaust themselves, and we don't have new relative buy flow to kind of break through that level. So that's, I think, a really good kind of short-term indicator. If you're looking to this 100K range chop, it kind of is telling us that it's going to be a tough chop and we'll be here for a while. And I wouldn't be surprised if that turns out to be the case. So that's the first thing I'm looking more short term. And then kind of long term, as I alluded to, what is actually the real announcements that we're going to see from the new administration? Like how is this presidential council is going to look like? Who's going to be there? What are going to be the main themes? What are going to be the key agency nominations? Perhaps the SEC is the one most people have in focus right now. All the candidates look awesome names, and then actually have more clarity on how this potential policy and regulatory unlock will look like throughout 2025. So these are kind of the two things I'm looking at: the regulatory news flow and kind of short-term liquidity indicators. I'll just put it in that broad category.
Brilliant. And Nilo?
No, I hate to keep saying it. I agree with David. I think, honestly, in an absence of news, in a news vacuum heading in, we have holidays, we have, the overhang of the election is done. I mean, we could look to Trump continuing to round out his picks for his administration. That's going to be something. But anything that's going to meaningfully move the market is going to have to come from within the market, I think. I believe we're going to see volatility through the end of the year. I think especially at this price point, we'll see significant volatility bouncing around. I do think once we puncture that 100 ceiling, I think we could have some significant upside after that, because I do believe there's a significant lid on the market right now. As David mentioned, every time we get near there, it skews to the downside. Once we puncture that, I think it's off to the races. So I'm curious to see if we can do that before the end of the year. But like I said, in the absence of substantive news, expect it to be choppy.
Absolutely brilliant. Gents, on our side, do you want to add anything before we close? Gabe, Mark?
Of course, like everyone talks about these psychological key levels on charts, and 100,000 is kind of like the easiest one to kind of pick out right in a room. And so it's incredible to hear you kind of articulate how you're seeing it transform in the data. It's permeating through the data and the order books, the bid ask queues, all that stuff. It just really makes a whole lot of sense on why we saw so much resistance and exhaustion on the buyer side. But yeah, no, I think it's after you get a lot of expansion, and we're in price discovery mode now with Bitcoin. It was bid up very violently. After the election up to this point, it makes a lot of sense that we get sideways chop coming into the end of the year. We're gonna get a lot of headlines, I think, talking about strategic Bitcoin reserves. There's gonna be talk about all sorts of pension funds potentially adding, or endowments, all these other kind of non-traditional crypto investors. And all I have to say is let's wait and see kind of what happens, and let's not get too far ahead of ourselves. But certainly the FOMO is kind of ripe to start setting in. And I'm sure if you're at a wealth management shop, you're getting inbound calls now from clients
Same as.
asking you about Bitcoin, asking you about digital assets, and I think over time, we know it's a reactionary business, it's a reactionary industry. We'll just kind of continue to monitor these 13Fs because we should see more and more traditional players kind of adopt it. So that's what I'll keep my eyes on and my focus on.
Yeah. And then on the macro front, I'm kind of watching all the developments there, and I see almost nothing but tailwinds. We've got a lowering interest rate environment globally. We have liquidity increasing globally. We have talks of fiscal stimulus over in Asia. It looks like we were going to be running potentially higher deficits here in the US. All of these things we know are good for a scarce asset like Bitcoin. So at the end of the day, 100K, it's not a matter of if,
Yeah, absolutely.
it's a matter of when.
Absolutely.
Oh, there we go.
Yeah. He came prepared.
There you go. You can clip that and you can upload that to TikTok.
You're like you can last.
will. Don't
Mark.
worry.
No
Don't
one
worry, we
will
will.
be able to top them after
We're going to
you.
be on TikTok. Hey, Jen,
Great.
so it's been obviously, I hope you can see this, been an absolute pleasure. Amazing to have you back on. And, this doesn't end here. You've really done it now. You should be coming back on a regular basis. Hopefully, both of you.
Sounds good. Looking forward to it. Thank you, guys. This is always very chatting.
Thank you for listening to CFB Talks Digital Assets. This recording is for informational purposes only and should not be considered investment advice. This recording is not intended to persuade or incite you to buy or sell any financial products noted within, including but not limited to exchange-traded funds, mutual funds, equities, other instruments that reference any index provided by CF Benchmarks Limited, or crypto assets. Any commentary, interviews, and discussions are opinions only and should not be considered a personalized recommendation. Please contact your financial advisor or professional before making an investment decision. Note, some of the underlying instruments cited within this recording may be restricted to certain customer categories in certain jurisdictions.